Loan modifications are a scam by the banks, period. I'm going to come right out and say it. I'm also then going to disclose to you that I used to be in the loan modification business. I actually worked for a company where we charged fees to modify loans for homeowners, or try to negotiate loan modifications for struggling homeowners. The truth of the matter is, at the time, we all thought we were doing a great service to people. As time went on, we realized what was really going on, and that the scam is from the banks. A lot of people think that loan modification companies are scam artists, and don't get me wrong, there's plenty of them out there, and there was a lot more of them. But the banks are the real scammers. There's nothing wrong with saying, I'm going to take my knowledge and I'm going to negotiate with your lender and do all the processing. And anybody that's worked with their bank for a short sale loan modification, anything on their own, knows how time consuming it is and how much work it is to process the whole thing, let alone if you even to have the knowledge to think about what you're submitting to the bank. Obviously, having someone, a professional, do that for you is not a bad idea. The government and the banks put those companies out of business, and the reason that the banks did this is because they didn't want people to get in the way of what they were trying to do. And what they're trying to do is give false hope to homeowners in order for those homeowners to keep paying on their loans that they otherwise wouldn't be. Paper is graded. Loans are graded. Like somebody with an awesome credit ranking, somebody with an 800 FICO score who owes $100,000 on their house and their house is worth $150,000, that's like AAA paper. Like, who doesn't want that loan, right? You're going to get interest on it. You're never going to, your borrowers are probably never going to default, and if they do, you're going to get all your money back plus some. That's great paper. What happens when somebody owes $200,000 and the asset's only worth, the house is only worth $100,000? Even if they have an 800 credit score, that's like bad paper. I would say like D paper. Okay? The reason why is even if they can't afford it, if they have any brains, at some point they're going to stop. The banks know this. You can only keep writing that check for so long. The pen gets heavier and heavier every month. You're throwing your money away. The Titanic is going down. It's sunk, and you're just throwing money at it still. Stop doing that. Okay? But the bank knows that if they can give you the false hope, the hope that they're going to fix the problem, they're going to work with you, you're going to pay them in the meantime, sell whatever you can, so the house doesn't go to foreclosure until you work something out. This is why people think they're working with the banks for a year and a half, and then all of a sudden the house got foreclosed. Well, they collected for another year and a half. Even if you didn't make the full payment, they collected all that time. That's why the banks are doing loan modifications. On top of that, they were clever enough to come up with these programs where when they do that, they get the government to give them money too, because they're being such great people and helping out homeowners. What a crock. There's been lots of trial loan modification. Compared to all the people that applied for loan modifications, the results have been terrible. Trial loan modifications, there's been a decent amount of those. And then permanent loan modifications, there's been hardly any. Like I said, false hope. They don't want to give you a permanent loan modification forever, 9 times out of 10. But they don't want to necessarily foreclose yet either, because it might end up as one of those vacant houses sitting there. And we know there's plenty of them around town. Banks don't need any more. It just drives the values of the existing ones down even further. Okay? So if you're struggling making your housing payments, I'm not saying don't look into loan modification, but I'm saying be very careful and leery if you're going to. Because it's a big game, and they will drag you along, and they will make you feel like it's, potentially going somewhere and that you're going to get approved. But 99 out of 100 times, even if you do get approved, the deal's not going to make sense. I don't care if they cut your payment down from $1,000 to $750. If you owe $200,000, your house is worth $100,000, you're never catching up. Go rent a similar house for $750 and shut yourself of $100,000 negative equity. I mean, what quicker way to jump your net worth $100,000 than shed $100,000 of negative equity? Do a short sale, okay? Obviously, I'm a realtor, so you would expect me to pitch that, but I'm dead serious. Loan modifications, most of the time, almost all the time without fail, are a terrible idea. And it's crazy. The banks don't want people that know what they're doing representing homeowners. They don't want smart realtors representing homeowners. They want the homeowners to just say, whatever you want from me, whatever financial information I can give you, I'm more than happy to provide if you'll look at helping me with my my dear mortgage payment. What a crock. The banks don't care about helping you. And then another aspect to the whole thing, which is great for the banks and terrible for everybody else, is, and I give Lee Honish all the credit for this. Those of you who don't know Lee, Lee is the former head chief loss mitigator for IndyMac Bank, and he's teamed up with Trent Chapman out of Southern California. They run an outfit called The Short Sale Genius. You can go to theshortsalegenius.com and check their stuff out. But they provide coaching, training, seminars, systems to process short sales and deal with the banks and all of these things. And Lee, at a recent seminar that I went to that Lee and Trent put on in Anaheim, Lee talked about this and what banks are doing. And Lee comes from he's a second generation banker. His dad was a cold-hearted banker just like Lee is, and Lee will admit that. Lee's the first one to admit that. It's what he does. He calls it like it is. He's a no BS type of guy. But what he said was that the banks in the future are going to look to collect on the deficiencies that are arising right now. If you owe $200,000 on your house and the bank forecloses and sells it for $100,000, that's a $100,000 deficiency that's going to go somewhere. And a lot of people just, think whatever. But realistically, know your state laws and whatever, because you might be protected, but you might not be. And if you're going to give the bank your bank statements and your pay stubs and your taxes and your W-2s and your kids' W-2s and your parents' pay stubs, I'm exaggerating a little bit, but if you're going to spill out your whole financial life to the bank just to get out of a loan or to try and get a loan modification, you're silly, because the bank is going to try to collect on that loan 5 years from now when they know that you have a $100,000 retirement account. Then they are the guy that they don't know anything about. So, and what they're doing is they're in exchange for home clients to give all their financial information to the bank, they're giving trial loan modifications. So here's the deal. I'm the bank, you're the homeowner. I'll give you 3 months in your house at a reduced payment in exchange for you giving all of your financial information to me. It's a bad idea. It's a really bad idea. And I caution anybody when they tell me that they're doing a loan modification, I caution them and I say, it is a real loan modification, right? Permanent terms for the rest of your loan. Most of the time what the bank does on a permanent loan modification, just so you guys are aware of that too, typically they extend the term to 40 years and then they bring the interest rate down. And then if that can't get them to a payment, which is safer for them to be on their books, then they might look at setting aside interest on a portion. So say you have a $200,000 loan, they've already extended it to 40 years, brought the interest rate down to 2%. Now they might say, okay, we're going to set $50,000 over here, and your payment's only going to include interest on this other $150. We'll deal with that $50 in 40 years on your balloon payment. Even a permanent loan modification is really not helping anybody that's upside down. Unless there's some emotional attachment to your house that you just can't get around. I'm going to say 999,999 times out of a million, loan modification is a terrible idea. And it's important for people to understand what the banks are doing. And it's really clever because not only is it helping them collect more money now, it's helping them collect more money in the future. And it's getting them more money now from the government. Getting TARP funds, which are troubled asset relief funds that that the government, they earmark certain dollars out of the bailout packages to give to banks when they do these great things for homeowners. And on top of that, here's the thing. Most people don't realize when you're making those trial loan modification payments, your credit, you're getting a ding every month. If your payment's $1,500 and your trial payment's $1,000, you're making that $1,000 payment, you're $500 short every month. That's getting reported on your credit. After 2 months, or 3 months, you're a month behind now on your credit, and you're dinged. So drastic things are happening to people's credit scores when they think, I'm doing everything the banks. They think they're paying their loan in full. No, you agreed 10 years ago or 5 years ago or 3 years ago to pay $1,500 a month. So if you're paying $1,000 a month, you're $500 a month short. Doesn't matter if you're in a trial loan modification. So basically, we need to call the banks out on this stuff and put a stop to this.